Hey guys, Reese here and welcome back to the channel. Becoming a millionaire is a goal that many people aspire to. It's kind of that threshold that many people feel that they've made it financially. And becoming a millionaire is pretty much possible for everybody given enough time. I think most of us have seen those videos on YouTube or read articles online saying that if you cut out your daily $5 Starbucks and instead take that money and invest it in the stock market, and you do that consistently for 40 years, you'll be a millionaire. Congratulations. And that's awesome that pretty much anybody with small sums of money invested consistently can become a millionaire if they start early enough in life. However, I'm 26 now, I'll be 66 by the time I'm a millionaire following these guidelines if I do nothing else. Why would I want to wait that long? That's not exciting. I want to make that money now or sooner and be able to use that and experience the freedom that money will provide earlier on in life while I'm young and healthy. And then what about for those of you that are 40 or 50 years right now? If you're starting off today at that age and trying to become a millionaire through just saving a little bit of money a day, well, you're gonna be, unfortunately, 80 to 90 years old before you become a millionaire. And for some of us, we just don't have that much time left. And not to mention that $1 million today will be worth substantially less 40 years from now due to inflation, just as $1 million today is worth a lot less than it was in the 50s. However, there is hope to achieve that milestone sooner, and in today's video, I'm going to show you all how, with a lot of hard work and persistence, you can become a millionaire in 5 years through real estate. However, full disclosure early on in the video here that I'm using average numbers, and some of us may be able to achieve $1 million net worth much sooner than 5 years, and some of us it may take longer, like 10 years. However, if you ask me, 10 years is still better than 40. So guys, if you want to become a millionaire in 5 to 10 years instead of 40 years, go ahead and give this video a like. And while you're at it, if you're not subscribed already, I'd love it if you would subscribe to the channel if you're interested in this kind of content coming at you twice a week. So with that said, guys, I made a little Excel document to outline these numbers and assumptions I've made to show you our path to millionaire in 5 years or so. So first, let's review the assumptions I've made in this document. And by the way, for those of you interested, I'll go ahead and share a link to this Excel document in Dropbox or something, so anyone interested can download this Excel document and play around with the assumptions I've made, if you feel like they just aren't realistic for your market or your financial situation. Now in this document, I assume that every unit we buy will have a market value of $100,000, and we will pay a purchase price of $85,000 for that unit. And we will go ahead and put a down payment of 5% down on this $85,000 purchase price. Now, most of these deals like this, where you can find about 15% below market, will be found through a network of investors you establish, wholesalers, maybe some real estate agents, or by cold calling owners yourself, which is the way I do it. It's not easy, it's a little bit uncomfortable, but sometimes you have to do what you have to do to achieve the goals you want to achieve. Now, for each unit, you'll put $5,000 into it in renovations to bring the market value of that unit up to $120,000. Now, because you took a loan out on this property, for every unit, you'll pay down $1,500 of the principal every year. You'll receive $2,400 in cash flow from that same unit. And after year 1 of ownership, that property will continue to appreciate an average of 4% a year. Finally, I assume you'll be working a 9-to-5 job throughout these 5 years of investing in real estate, and real estate will be your side hustle. So I've assumed you have a base income of $60,000 in year 1. You'll receive an annual raise of 3%, and your tax bracket is 25%, which is maybe a little bit lower than it would be normally, but you'll have the tax advantages of real estate lowering your tax bracket. I also assume you'll be spending about $15,000 a year of personal expenses, and that's cheap because you'll be living frugally and also living in one of your units foregoing rent. So as we see by reviewing these assumptions I've made in this document, nothing about this is going to be easy, that's for sure. However, nothing about becoming a millionaire in 5 years is meant to be easy, unlike what any guru online promises you. This isn't magic and it's not get rich quick, it's get rich semi-fast with a lot of hard work. Finding deals this good will probably take a while. Not every property that comes up on market will be a good deal, And you may very well have to find these deals off market, like I said earlier, through wholesalers or other investors that you establish a network with. However, this is definitely possible to find this good of a deal, especially if you only need to find one good deal a year. For example, I'm in contract on a duplex right now that we're paying $160,000 for. We plan to put about $15,000 to $20,000 into it, and I expect it'll be worth about $225,000 to $250,000 after we're done with it. Once we're done renovating the property, we will rent it out. I expect to receive $220 in cash flow per unit with only 5% down. So I don't want to see any comments down below that these numbers I'm using are ridiculous. If you're not willing to put in the work to find these good deals, then don't expect to make substantial returns in this industry. Instead, settle for average, still invest in real estate, but become a millionaire in maybe 10, 20 years. Anyway, let's dig into the year one numbers now. Now, year one is going to be the most difficult, and you'll see why shortly here. In year one, you'll be working your 9 to 5 and saving as much money as possible. You should be spending this time learning as much as you can about real estate, as well as networking with real estate agents, active investors in your market, and wholesalers. These people will be your best friends when it comes to finding those off-market deals, even if you do decide to add cold calling into your business. Now, in this scenario, you'll work all year long, and then you'll buy a 4-unit property at the end of year one. Now, this 4-unit property should be worth around $400,000, but you'll get it as a great deal off market because it's in pretty rough shape for $340,000. You'll then put $20,000 into this property to renovate all 4 units, and you'll probably do all this work yourself because $20,000 is not nearly enough to stretch over 4 units paying contractors. However, I'm sure you can find some family members and friends who will be willing to help you out a little bit for free. Now, once the work is done on this property, you'll move into 1 unit, and on average, that property should generate about $800 a month in cash flow. And your equity in this property will be $120,000, and that includes the $37,000 that you put into this property through the down payment and renovations. And now for those of you thinking 5% down on these properties, that's highly leveraged and super risky. Well, that's why we're buying below market real estate and then investing more money to increase the value. See, because we bought this property at $340,000, we only have a loan of $323,000. However, we renovated it, and now the property's worth $480,000, which is a loan to value of 67%, which is very conservative. Now, this scenario doesn't include principal paydown or cash flow in year one because it's assumed you'll be looking for the deal in year one and also doing renovation work, and therefore cash flow will pick up in year 2. And therefore, the property bought in year 2 won't cash flow till year 3. Property bought in year 3 won't cash flow till year 4, etc. Now, as I said earlier, year 1 is going to be the most difficult year. And that's because by just working a 9 to 5 job, in this scenario, you've saved about $30,000. However, the down payment was about $17,000. There's going to be some closing costs in there that I've left out for simplicity. However, in real life, you'll definitely have to include them. And then you've got the $20,000 in repairs that you need to budget for. Plus maybe some reserves for safety as well. So that's about $40,000 to $45,000 needed, but you only have $30,000 saved. And this is where you need to get creative in year 1. Maybe you work a part-time job for the full first year to earn that difference. Can you live off less than $15,000 a year? Or perhaps pay the seller $345,000 or $350,000 and then have the seller cover your closing costs and maybe escrow some money for repairs. Perhaps you stretch this 5-year plan into 6 years and save money for 2 years. And if none of those work for you, maybe year 1, you only buy a duplex, and 2 units is definitely better than no units. The worst thing you can do is just say it can't be done and give up. Anyway, you can make up the difference in future years. For example, I have linear progression with buying a 4 unit every year. However, in year 5, you save $74,000 through earned income and cash flow. But you only need in year 5 about $40,000 for the down payment and the renovations on that 4 unit. And so you really might have enough money left over to then buy another duplex in year 5 to compensate for not buying enough units in year 1. However, keep in mind that you'll have to put 20% down with a commercial loan on that duplex since you can only use one low down payment loan a year. Now, I won't go ahead and go through all 5 years here because it's pretty much the exact same thing. Every year, you'll buy a 4-unit property worth about $400,000. You'll buy it for $340,000 and put $20,000 into it in renovations in order to make it worth about $480,000. And then you'll go ahead and rent it out and start collecting cash flow from it. As we work our way to the end of year 5, we see that we have equity in our properties of about $872,000. And that doesn't include principal paydown, even though that is equity, because I've broken that out separately in the set sell document. And so we can then take the equity in our properties at the end of year 5, and then sum up the money we've saved over 5 years, in addition to the principal paydown and the cash flow, and then subtract out our down payments and renovation costs, as that's already considered in the equity. And that equals the magical $1 million and some change. And this scenario is possible for many people. However, like I said, real life may not progress linearly like this with 4 units every year. You need to acquire 20 units over 5 years with the criteria I defined earlier. So you could perhaps buy 2 units in year 1, 2 units in year 2, 4 in year 3, 4 in year 4, and maybe 8 in year 5. You won't be able to use that 5% down on anything above 4 units. However, you can refinance some of the properties you bought maybe in year 1 and 2 to give you a little extra money, and then put 20 to 25% down on that 8 unit in year 5. The point here is, get creative. If this scenario won't work for you, don't just go ahead and throw in the towel and give up, and then comment angrily below saying this is unrealistic. Rework the numbers, and then figure out how you can do it, not why you can't do it. With that said, guys, thank you so much for watching the video today. I really appreciate all your support. As always, please like this video, and if you're not already, please subscribe to this channel if you're interested in this type of content twice weekly. And guys, I'll see you in the next video. Have a great day.